Mexican President Claudia Sheinbaum said on Wednesday Mexico would retaliate if U.S. President-elect Donald Trump followed through with his proposed 25% across-the-board tariff.
In case there are tariffs, Mexico would also raise tariffs, so it is a technical move that would also represent benefits for Mexico in the event of a situation like this.
Trump had said the tariffs would remain in effect until the flow of drugs, particularly fentanyl, and migrants into the U.S. was controlled. Mexico has warned the tariff could kill 400,000 U.S. jobs and drive up prices for American consumers. Trump's proposed tariff could violate the terms of the U.S.-Mexico-Canada Agreement on Trade, which the country signed in 2020 when Trump was president. That deal continued the largely duty-free trade between the three countries. Sheinbaum said she was confident the agreement would stand. Mexican Economy Minister Marcelo Ebrard, speaking alongside Sheinbaum, said the tariff hike would deliver a hard blow to the automotive sector's top cross-border exporters, including Ford, General Motors, and Stellantis. Ebrard noted that nearly 90% of pickup trucks sold in the U.S. are made in Mexico and would see a price increase. These vehicles are popular in rural areas that overwhelmingly voted for Trump. Sheinbaum and Trump spoke by phone later on Wednesday, with the two discussing topics at the top of Trump's agenda. In a post on Truth Social, Trump said Sheinbaum, quote, agreed to stop migration through Mexico and into the United States, effectively closing our southern border. He described the conversation as very productive. Sheinbaum later responded on X that on the call she had laid out Mexico's migration strategy, which, quote, attended to migrants before they arrived at the U.S.-Mexico border. She added, quote, Mexico's stance is not to close borders, but to build bridges between governments and their people.
Analysts believe President-elect Donald Trump's upcoming term could be the start of a bruising four-year trade war. And on Thursday, China hit back against Trump's pledge to put additional tariffs on Chinese goods over fentanyl flows. A spokesperson for China's Commerce Ministry said the incoming administration was pushing to blame China for the U.S. opioid crisis.
China's stance of opposing unilateral tariff increases has been consistent. Imposing tariffs arbitrarily on trade partners cannot solve the problems within the United States itself.
Trump, who takes office on January the 20th, said on Monday he would impose a 10% tariff on Chinese goods. He says he wants Beijing to do more to stop the trafficking of Chinese-made chemicals used in fentanyl, a highly addictive narcotic. He also threatened tariffs in excess of 60% on Chinese goods while on the campaign trail.
The United States should abide by World Trade Organization rules and work with China to promote the stable and sustainable development of economic and trade relations, in accordance with the principles of mutual respect, peaceful coexistence, and win-win cooperation.
Trump's comments fired the starting gun for what some expect to be a trade war potentially much worse than in his first term. That saw tariffs of between 7% and 25% and global supply chains uprooted.
ASML shares jumped up more than 4% on Thursday. Its peers in the European computer chip equipment sector also climbed. Investors were pleased by a Bloomberg report about upcoming US restrictions on the Chinese semiconductor industry. It said they might be less severe than expected. ASML rivals were also up in early trade, with their shares among top performers on the European benchmark Stoxx 600. The Bloomberg report cited unnamed sources who said that major Chinese memory chip manufacturer Changjin Memory Technologies would not be added to US trade restrictions lists. It further said the timing and contents of the decision are not certain. The US Commerce Department oversees US restrictions on China exports. It's expected to issue new guidance after the Thanksgiving holiday. ASML is the largest supplier of semiconductor making equipment and declined to comment. The company recently said it expects sales of its tools to China to drop to a fifth of total sales next year. That's down from nearly 50% over the previous 6 quarters.
Wall Street's main indexes closed lower on Wednesday after the latest inflation data sparked concerns that the Federal Reserve may move slowly on rate cuts next year. The Dow dipped 0.3%, the S&P 500 shed almost 0.4%, and the Nasdaq lost 0.6%. The latest inflation data showed prices ticked up slightly in October, putting the annual inflation rate at 2.3%. Those numbers were in line with expectations, leading most traders to bet the Fed will cut rates at its December policy meeting. But Sam Stovall, chief investment strategist at CFRA Research, said cuts may come at a slower quarterly pace in 2025.
I think that the shift to the quarterly reduction is because the Fed acknowledges that the economy is remaining fairly resilient, is not in need of rate cuts, implying that we're not on the precipice of recession. And at the same time, I think they want to keep their powder dry if in case the economy does show a quicker demise. So right now, the Fed does not want to keep rates high for too long, thereby strangling economic growth. But at the same time, it doesn't want to end up re-stimulating inflation.
Stocks on the move Wednesday included Dell, which slumped 12%, and HP, down almost 6%, after downbeat quarterly forecasts from the personal computer makers. The sentiment spread to NVIDIA and Microsoft, which both closed lower. And Workday slipped more than 6% after forecasting fourth quarter subscription revenue below expectations, hit by weaker client spending on its human capital management software. Markets will be closed Thursday for the Thanksgiving holiday.